right, it's time for our viewer outrage segment. Should people be allowed to use their 401k without a penalty to buy a home? Here's what you said. Ed from Oklahoma said yes. This would stimulate the housing market and give people more incentive to keep current if they have their own money invested. Joining us now is John Taylor, President and CEO of the National Community Reinvestment Coalition. Also Mark Byelich, founder and president of MJ Byelich and Associates. Thanks for joining us. John, I'll start with you. What do you think about that idea?
I think Ed from Oklahoma is right. It's a perfect time to invest in the market. It's going to help jumpstart some of the property sales if people use the 401k and if it's the right circumstance and time for them. Interest rates are low, house prices are low. From an investment standpoint, this could be a much better return than leaving it in a mutual fund or wherever they have their 401k.
Well, actually, John Taylor, if I go to you, over the last 3 decades, 30 years, housing has not been a good investment. Home prices, 4% annual rate. This starts 1980 through 2010. Right. Stocks up 11%, corporate bonds and treasury bonds up 8%. I mean, it sounds like it's really an inferior investment. But
it depends on when you buy, Larry. Like, for example, if in that period, if you bought in the late 80s and kept it until, the early 2000s, it would have been a great investment. It would have had a much better rate of return than what you just quoted. And what I'm saying now, right now, property values are down throughout the country. In some areas, 20, 30, 40%. So if you're able to get a house at a discounted price, and then the interest rates now, Christ, they're at 4.4%. And
it's okay, it's cable. You can say whatever you want.
It's cable. You can even get loans at 4% now. It's somewhere between 4 and 4.4%. I think 4.4 is the average now. That's a terrific time to lock in, for a 30-year fix, no less.
But, Mark, if you look at Gerald O'Driscoll's op-ed today in the Wall Street Journal, the real problem is not liquidity, it's that we don't save as a nation. We're over-leveraged. Here we go, taking our savings and throwing them spending them, making it a liability.
Right, exactly. We're putting it on the wrong side of the balance sheet. The objective is to increase assets, decrease liabilities, and what we're doing is taking an asset and making it a liability. Your home is not an asset, it's a liability.
And how are those 401ks been doing with the market now, in terms of building your assets?
Go ahead, Mark.
Well, it all depends on how you're addressing your 401k. Talking about a timing and the ability and the time to buy, now is the time to continue to purchase investments within your 401k and take advantage of it. The problem has been that folks have come to the sideline. You have to be consistently engaged and have a plan. Removing assets from your 401k is not going to help. It eliminates a protected asset that's protected from creditors and opens it up to creditor attachment in your home. I just don't see the value in this proposal.
No, I think that's a valid point, but in terms of just a strict investment, I think you can, at least for short term, if you can invest in a house, look, I think a lot of the right things have been done, in spite of what I think a lot of was heard in a previous program. We're beginning to see some light at the end of the tunnel. Housing prices are leveling off in different areas of the country. The sand states like California, Nevada, Florida, Arizona, that's still a huge problem. But for the most part, we're going to see stabilizing of house prices, increase house prices. If you can get in and then get out and put it back in that stable investment.
I don't know, but Mark, if I look at my portfolio, if I'm the average person, my 401k has gotten hammered and my home value has gotten hammered. They both seem to stink.
But the issue is that your home is not an investment. We're not talking about real estate investment outside of your home. Your home is,
so that's again, 200 million Americans.
But what do you do with it? It's only an asset to your heirs or to the government. So let's incentivize an individual saver to make a contribution to their 401k to maximize the contributions to the 401k. Let's give them a tax credit if they maximize their contribution. Let's give them a tax credit if they save 10% of their gross. We're not talking about investment in real estate. We're talking about the home you have to live in and then the home that you have to replace when you go into retirement. You can't draw from your home for retirement.
I mean, John, you're kind of trying to have it both ways, John. I got to object to you, my friend.
Yeah,
look,
go ahead.
You're saying, what about the short run? I'm saying a 401k is a long-term, 30, 40 year. It's a retirement vehicle. And I said, if you look at the numbers, stocks and bonds both outperform homes, frankly, by more than 2 to 1. And I don't see why we should be channeling more capital into the housing sector, which, frankly, has really hurt the American economy. It's hurt capital formation and productivity. Why should people do this?
But again, if you're nearing retirement, I totally agree with you, Larry. Don't do this. If you're not going to be able to sit there for a while and watch the house appreciate, what you said just makes a lot of sense. But strictly from an investment point, if they can't get, if there's a way for them not to be dinged if they pull their money out of the 401k and they're able to purchase a property and hold on to it for 5 or 6 or even 10 years, I think the rate of return will outperform the market. You know, but my crystal ball is not.
It's not what the data show. I'm sorry.
And I don't think you can. And you can't look at it as an investment. You just can't. It's the home that you live in. It's your shelter.
I hear you saying that, except that isn't that what everyone's done? I mean, the home ownership has been.
But it hasn't worked well, John.
Well, it's worked well for a lot of Americans. I mean, people have sent kids to colleges, started businesses, and in fact used quite a bit of their equity that they build up in housing for retirement. So I'm not sure it's fair to say it hasn't worked well. I think that's.
It did work. It stopped working. The question is, will it ever work again? I don't think we know the answer, but we're going to leave it there, guys. Thank you for joining us. We appreciate it.
All right. When we come back.